The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
All right, folks, looking good. Billy Ray, feeling good, Lewis's, from the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. We start the show with the German DAX. As you can see here, we ran into some pretty stiff resistance up there at that triple top. Whether it's going to last for very long or 2 minutes, we don't know, but there's a really strong indication it could have a pretty good correction from this level. Now, we're going to take a look at old Boris Little Trump Johnson's market. That's the FTSE, which is a very small market, by the way, folks. It's equivalent to our American Stock Exchange, I think. You'll notice here that we had a 3-drive to a top pattern up there at 7,400. We backed off a little bit from it, but that is a completed pattern. So that's another one. Remember, they're coming within the time frame of that moon that we had here, the new moon that we had here on Saturday. So we'll watch. Now we're in October 1st. We had the big celebration over there in China. Those of you that watched it, it was just really spectacular. I mean, it was really something to see, and it was very interesting. Okay, now the first thing that everybody, I got about 6 emails about this last night, and that's about the yellow metal. Boys and girls, I'm going to give you my 2 cents worth, and believe me, sometimes it's overpriced. Here's what we were looking at. Let's get this little puppy up here, and we'll take a look at it, and you'll see it right here. This is the 4-hour chart. And what we're looking at here is that head and shoulders pattern. You can see we had the left shoulder, the head, and the right shoulder. That was up around 1540. We came all the way down last night to 1465. That's what we hit. The major ABCD pattern on this measures to 1470, but there's a slight difference because this is a continuation chart. So if you look at it, it's probably closer to 1465 to 1460 for the ABCD pattern, if in fact that is what it's doing. And again, you know, we really don't know. Now, last night, being a little interesting in it, as I usually am, I was watching gold overnight just to see if I could find something that would be, tradable and not having to risk very much. And what I ran into here is this is just the old 4-minute chart with my moving oscillating oscillator. You'll notice that it made a 3-drive to a bottom pattern down there at 1465. That was a perfect ABCD, and that's it. Now let's go back into the history books a little bit and talk a tiny bit about 1465. A high on we made here was 1567. If you subtract 67 from 45, you come up with 102. The harmonic number in gold is 34. You multiply 34 times 3, subtract that from 1565, and you come up with 1567, you come up with 1465 spot on. So there is a chance, and I say a chance, that this is the bottom at 1465. We're trading at 1471, something like that right now, but your risk is below that. Below 1463, it's no good, and you don't want to mess with it for sure. That's what I'm looking at. Hey, we've got a caller on the line. Mr. Z, what it be? How are you, my friend?
Mr. Pesavento, can you hear me?
Yes, sir. Coming in loud and clear.
Excellent, sir. You are reading my mind, looking at all the things I'm looking at, and frankly, in gold that is. And frankly, the only reason I'm looking at the things you're looking at is because you've taught me well. But having said that, and given what you've just said about the gold market, very specific question occurs to me to ask you, namely, how high does December gold need to rally to say to you odds are very high the low made last night is in fact a bottom and end of this correction off September 4th high?
John, this is just, I'm just going to give you my 2 cents worth again, but if we know the harmonic number is $34, so half of 34 would be 17, add 17 to 65. That means if we get above 1482, I would say that's the first indication that that bottom is in. That's
I like
what I
that,
would.
Larry. Yeah, that's simple. That's easy. I can do that, sir.
Yes, if I can do the add and subtract. It's when we get into the multiplication and division that I run into lots of problems. So we'll see.
Yes,
see what we're watching here for sure. Yeah.
Great. I am calling in to ask if you would help us go through December corn and November beans.
You betcha.
Well, a couple of things. One, they both rallied yesterday in reaction to the Monday noontime USDA quarterly stocks reports. So they both rallied. You and I spoke a Friday couple weeks ago, just after you had gotten back from your London trip, in which I just showed you and your listeners the monthly chart that I had looked at way back from 1993, which was the Great Flood of '93 year, in which the corn and bean markets bounced during the summer, during the actual flooding down the Mississippi River, but really didn't go that much, and then surged between October and January 1st, and it surged as the data came in from the field week by week by week, in which the farmer harvest results were showing, holy cow, the flood damage had been much more severe than anybody really recognized during the summer. The crop was much lower and prices surged. So that was a couple of weeks ago that I had that conversation with you. And lastly, the third point, I do recall listening to your show yesterday, and in fact, if I'm not mistaken, I heard you say you were long corn. So you obviously profited by this rally. So we've rallied. What do you see next, and what sort of parameters are you using to manage your long side position, please?
Okay, John, I posted the chart of the December corn here, and if we get cut off here because of the break, let's stay with me because we have to cover the beans. I'm in March beans now. I've switched from November into March, so we can do the same. The charts are the same, so it shouldn't be any problem. But you'll notice here that we have two major numbers coming in on corn at 395. We're trading right now at around 386 this morning. That position is up, well over $1,600, and so what I'm recommending is probably making a mistake here, but I think it's time to book some profits here in the corn because they're not easy to come by, and I'm willing to pass up this last 10 cents to book the the 37 cents. That's what I would think would be the best strategy. But we're going to pay a few bills here, folks, and we'll get back. We're going to talk to Mr. Z more about the corn and also the November beans and also the meal, because the meal is the leader of the pack. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we're talking with Mr. Z from the Den, and we're talking about soybeans. I'm looking at the March contract. You can see here we've been in a pretty good upswing here over the last few weeks. The last little pullback we had was rather minor, and gosh, it was there for, 8 days before it decided to move higher. What's amazing to me, John, is the fact that, we don't have any tariff news that's any good at all, and yet these grains are starting to rally. That tells us it's looking like that 93 scenario that you talked about, maybe a little closer to the truth.
Indeed. Thanks for sharing that March bean contract, Larry. I understand why you've rolled out of November and skipped January going to March. Of course, all we're dealing with when we're, November, the November contract is the first contract against which the 2019 crop coming out of the field can be delivered against. Mm-hmm. And then, January and March futures are merely that crop, the crop priced with an inferred or embedded storage cost as it sits in the bin. And just going with that March contract allows you the continuity of sticking with one contract in through February without having to rejigger the numbers and redo your calculations. So thanks for sharing that. Larry, can you turn back to that D's corn contract? I'd like to ask you a very specific question, and people on Tiger TV might be interested to see the feature I want to ask you about. There you go. Larry, you can see, looking over from today's price, just over to the left a touch, the dates of August 12th and 13th, the big down bars and an open gap.
Yes.
Just to remind myself and you and your listeners, that big, wide-ranging bar August 12th was a limit down day. That day, that limit down move in December corn futures was in reaction to the August 12th USDA crop report. Mm-hmm. And the crop report that caused people to be bearishly surprised was the USDA had estimated yield for the national crop much larger than anybody had guessed the USDA would do. That was the cause of that decline. The following Tuesday, there was a decline extension, leaving that gap. So my question is, if we either at 9:30 this morning gap higher, or say we back and fill today, Tuesday or Wednesday, and then gap higher in subsequent days, we leave an island bottom sort of phenomenon.
Yeah, we
and
certainly
if we
would.
do that, my question, what do you do with that, sir, if that happens?
Well, you take a picture of it and talk about it a few months later. I have no idea, John. It's such a rare phenomenon that it would really certainly mean something. So I'm telling you like it is, my friend. I mean, I wish I could make something up for you, but it's going to take me a while. No, I mean,
Larry,
it's just
I love your honesty.
Well, I try to keep it as simple as possible. When it comes to doing the numbers and profits and losses, honesty is indeed the best policy. You can't hide the truth when it comes to numbers when we're dealing with trading, can you? Well, we try to keep it as simple as possible. We can't always do that. But in this particular case, you're right. That would be an island reversal, and that's one of the reasons why I'm lightening up on the corn here today is to just to see what happens. You don't get a 37-cent move in corn very often, and so I think it's time to ring the cash register. Of course, I did that in gold at 13.75, which was a stupid thing to do, but, those are things that happen. But, you'll get another chance to get in it no matter what. But the fact that it's acting so well, given the fact that the news is so bad. I mean, we're basically at economic war with China. It's not a physical war, but we're certainly looks like that's the direction we're going to be going. And yet, these things.
Can I stop right there and share a competing view?
Sure, please do.
And I say this with the utmost respect. And anybody dealing in the markets, I never say I'm right, you're wrong, ever, never. It's just market participants thinking one way or another, and of course, with all of us competing in the marketplace, we can have diametrically opposed views. That is par for the course, and such is the case now. My view, Larry, is the news on corn is not bearish whatsoever. It's in fact very bullish. From a demand, and said in this sense, from an export demand perspective, U.S. exports of corn aren't down. We never shipped any corn to speak of to China. And so we're just doing exports routinely the past 24, 36 months. On the margin, things have been a bit bearish demand-wise, because the Trump administration unfortunately violated the promise it made to the farming community to defend the ethanol business when the Trump administration essentially, through what they call special small refinery waivers, cut demand for corn out of the ethanol sector and replaced it with...
John, are you telling me that a politician lied? Is that what you're trying to say? I find this very hard to believe.
No, I didn't say that, Larry. I'm just telling you the truth.
Okay. Go ahead, my friend.
Yeah, if you want to judge what somebody else said, I'll leave that to you. No, those aren't my words. No, I didn't say that. But anyway, just to make the point, as I look at the news, both demand and supply side, I held the same view as you in July in through August, that yes, the news was negative. Absolutely. I try to stay in touch with things and understand what people are thinking about and the facts that they're dealing with. And my competing view to yours is that the news on corn is good, not bad.
Well, I'm looking at just the news of the tariff. I don't, the fundamental stuff. I don't follow that at all. I rely on Cy and Rich, and they're wildly bullish on corn. So I'm already aware of that.
Interesting. Thanks for sharing. That's new news. I didn't realize that. That's interesting. Good. Okay. Well, we will see in the next 30, 60, and 90 days if, in fact, that 93 analog is coming to fruition. And just in the for what it's worth department, if this, I hear the music.
Well, just remember, John, in the land of the blind, the one-eyed man is king. So call in again, my friend. We enjoy talking to you.
Thanks so much.
877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted the chart of the British pound. As you can see here, it looks like we're heading down towards the, you can see that level down there at 121 and change down there. Each of those retracements that we had there on the pound were exactly 382, which is a bearish phenomenon that we've seen in the wave structure, of course, but that's what it looks like in the British pound. Now, since we were talking about the grains with Mr. Z, one of the things that we wanted to focus on was the soybean meal. This is one of the things that we talked about in the newsletter this past week, that it looked like it had a really good bottoming process in here, which we had the higher bottoms, and we had a really nice $800 move in soybean meal on yesterday, mainly because of that report. But whatever it happens to make it go, that's what you need to see what happens. So we'll keep an eye on that. But it's just the beginning of this, so we'll see whether it's going on. Folks, when I talk about, when I hear something bearish, I'm just looking at what the news is basically saying. I like to see how the market reacts to the news. If they're really bullish and the news is really bullish and the market doesn't do anything, it only has one way to go. That's to the downside. And by the same thing on the other side, if you got something that's really, really bearish and it can't go down, get ready. It's going to be going. You're right, Marshall. It was a beautiful 135 pattern, and that one worked, and it held up pretty good. Now, remember, we had another 135 pattern that I want to show you that didn't work, because when these things fail, you have to know what to do. And, of course, the main thing is you've got to get out. We had a really nice 135 pattern, but we broke the $54 per barrel level in the crude. We're just a tad above it right now, but that did break that 135 pattern, so that is no longer, in the realm of working for sure. Now, there's one other one, folks, that really deserves our attention here. And let's just get up here and take a quick look at it. This is the Treasury notes. Let's just get these up here, and then we'll walk through this. You can see the big ABCD pattern when we made the high back on September the 3rd, again, right on a major new moon, as Norman Winsky pointed out. Really nice three-drive pattern up there. It was also the 78% level on the long-term weekly. Then we had the big drop. We went down from 132 all the way to 128. That was equivalent to 7 points in the Treasury bonds. We then made the ABCD structure right up to the 61% retracement at 130.25, and now we've broken below here since last night, folks. We've actually gone down to the 50% level at 129.22. So there's a possibility that could be the bottom, or the ABCD structure measures to 129.12 to 129.10, and that's going to be very important, because anything below that is going to tell you that there's trouble in River City, and these bonds are going to be increasing in yield. They've already increased in yield, over the past 2 months, the past month between September the 3rd and October the 1st. So whether it continues to go down or not, we'll have to wait and see. But I don't think the negative interest rate scenario is going to be around for much longer. We've had a request to take a look at one of the cross rates that we don't look at very often from our friends up in Canada, and we'll get this up here and take a quick look at it. This is the old loonie. You'll notice here we made the X point back there. Now, you could have picked either X point. That's one. You could have taken the one from the 19th. You could have taken the one from the 23rd. This is an hourly chart. All of the ABCDs are not drawn in, because this gentleman was just trying to highlight the Gartley that we have here. And you'll notice that the Canadian dollar is running very closely on the 707 level. The difference between 618 and 707 is insignificant for trading purposes. 707 is a Fibonacci number. It's the reciprocal of the square root of 2, which is 1.414. And now what we're looking at is this completing. And if you happen to be in that trade, you would already have had your stop at your break-even point, because it lined up so perfectly that you don't have to risk any more than that at any particular time. So these are some of the things that we're paying close attention to. I think what we ought to do, and what we ought to do is what we will do, because if we will do, we shall do. Let's take a look here at this E-mini S&P here, because we had this big bottom off of the 27th, which was that new moon, and you'll see that we got up almost to the exact 61% retracement last night of the high that we made at 30.25. Now, I like everybody else, I don't know whether that's going to be it or not, but we'll be able to see if it's going to work or not. I don't know, but nobody else does either, folks. The big $64 question is the gold going to hold this level? And the other question is, why has silver held up so well, folks? You know, look at silver should have been, let's just look at silver. You'll see how much stronger it is because it stopped at the 50% level. Let's get this up here because someone's already asking. We filled the weekly gap at 1746. We rallied back to 1780, I believe, on Friday, closing at 1759. We got down, we took out $17 an ounce. That was, I think our low was $16.95, and we've since rallied 20-some cents in silver. So maybe that is only going to make a 50% retracement because look at the perfect ABCD that we had in the gold market, and we're not getting that in the silver market. That's just not happening. So that could be a sign that silver is the way to go. I almost put a buyout today on silver just because of that 50% retracement and the fact that the gold did, make the ABCD. It has completed the ABCD, folks. There's no question about it. That 1465 has got everything that you could ask for if you're looking at pattern recognition. You have a perfect ABCD. Hold it. We got a question here from Mr. Z about 1978. 1981. Something about that it crashed. Please tell us from. I don't remember. He's asking about the Kuwaiti, the Kuwaiti stock market. I don't remember that. 1978. You know why, Mr. Z? 1978 to 1981. I was focused on two things: gold and silver and treasury bonds. We didn't have stock index futures. I was trading at Drexel, so stocks meant absolutely nothing to me. And I don't know, but Bitcoin. I'll bring up the chart on Bitcoin because it's trying to hold on, but just barely. And I think it's it's just here. It's on a hope and a prayer, and I think the prayer part is just about really gone here. So we'll see. But I wasn't doing anything in stocks back in 78 through 81. That was the highlight of my years at Drexel. I mean, I was long that stuff and. I remember it well. Anyway, I don't remember that. And I don't know if that Kuwaiti stock market is very big or not. I don't think that it is. So, that's just my 2 cents worth. Sorry, I can't help you. I did some research, of course, on stocks. Once I got to Chicago, they started trading in the S&P on April the 16th of 1982. I got there in late January. And then when the market bottomed, the market actually bottomed for stocks on August the 9th of that year. The S&P was trading at 103. And folks, the S&P was actually trading at a discount to cash. All you had to do was to buy the futures and hold till expiration, and you made 2.5% or 3%. That was not a lot of money because the interest rates were high, 12, 13%. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, we'll get back to Bitcoin for just a second because I don't really have a position in this. I never have had. I listen to what's going on with blockchain technology, and certainly I don't understand it. But if we take a look here again at this Bitcoin chart, you'll notice you do have an ABCD down here at 8,000. But frankly, I don't know if it's broken below that. Usually it travels along with what gold has done, and since we've had this big sell-off in gold since September the 3rd, you can see where Bitcoin was on September the 5th. It was trading at 10,800. That's when gold made its high at 15,067, and you can see, you know, the big drop we had in Bitcoin, and yet gold dropped over $100 an ounce. So it's actually holding up much better than what's really doing it. If you're gonna look at something, folks, I would suggest you look at the silver, and the reason why it's acting better than the gold, you know, maybe it hasn't made the targets yet, but the fact that it hit the 50% level, I think that would be the one to look at. So, you know, you have to put your stop below 1690, because if it gets below that, it could go back to that target that we talked about, which was 1660. That's a very, very vivid ABCD. We should bring this to your attention here one more time, you know, to let you take a look at it. But you'll see here that that's what you're looking at here when you're looking at this thing. So you have to make a decision. It's a question how much risk you got to take to see if you're going to be right. The fact that silver is looking a little better is, in fact, last night while I was watching gold make the 3 drive to a bottom pattern down there at the 1465 level, silver was unchanged to up on the day. It couldn't even get lower. And then finally, after gold made the bottom at 1565, then what happened was, you know, silver started to move, and it moved 20 cents higher, which isn't much. But you know, when you're in a vivid bear market like that one is, 20 cents is quite a bit. So we need to focus on that a little bit. Someone's asked to bring that chart up again on the 3 drive to a bottom pattern. Basically, folks, all I'm doing here, the question that the person had is, why am I using a 4-minute chart? I just picked 4 minutes. I do 4 minutes sometimes. The difference between 4 minutes and 5 minutes is insignificant, but Bryce Gilmore always thought that the 4-minute was more apropos for day trading because the Earth rotates 1 degree every 4 minutes. But frankly, I don't think it makes any difference. As long as you can see the patterns and check the ratios, that's really what we're looking at. The natural gas, I believe natural gas has a pretty good chance in here. Can someone tell me if we are up or down in natural gas this morning? Because we are looking at a really interesting, I'll bring this up here so you folks can take a look at it. I believe that the natural gas has some pretty good potential here because we did get down and make this pattern that we talked about. We got down to the 230, 231. 230 was his exact number. I don't know if it's still holding up or not, but as long as we don't get much below none this morning, Peter. I'm not going to do those anymore. I get too much flack on that, so I don't really want to get too much involved with it. But if someone could give me the last price on the natural gas, either the December or November contract, I'll give a rough idea because you don't want to risk more. At the most is $400 on that natural gas because if you buy it at 31. You want to be out of it at 27 if you're 227 if you're wrong because that's your last support. You're right at the ABCD, and of course when ABCDs fail, they go on to extensions. Low last is 230. Yeah, we're good. So you're okay. The buy was around 230. You stop around 227. So I think it's still acceptable as long as we don't get above that 227. I think you got a chance, or 226. $4 is the most you want to look at. So the key number there, as we just posted, this was the one from Friday that we did in the newsletter, was at 230. That was in the November natural gas, but in the December natural gas, the number was 250 because of the difference in the contracts going out with carrying charges and things like that. But the crude oil is still under a great deal of pressure. It's down near the 78% level of the whole thing, but it's been acting so badly given the fact that we had almost a war and losing supposedly oil supply, which we didn't lose. That was another fake news idea that they had. So those are just some of the things that we want to keep on our plate this morning to see what's going on, with some of these things that we're paying really close attention to. Okay. Keep in mind, folks, the number up there at 29.95 in that S&P is a very important number, so we want to watch that very, very closely. That number in the Dow E-mini is at 27.050. That completes the 61% retracements of those moves that we've seen in the past. So we'll just watch those as we go through and look at some of these other charts that we're watching here. We got the gold trading at $14.69. We're only $4 off the bottom. We could easily get down there and take out that bottom and go even farther to the downside. So pay close attention, folks. It's not about how much money you make; it's how much money you don't risk. So just keep your stops in there and don't risk a whole lot. That's the bottom line of what you're looking at when you're watching some of these things unfold here today. So the euro we've been talking about. We're trading in the euro at 108.80. This, folks, the euro really has its eyes on a lot lower prices. You can see here. This is the one from Friday. You'll notice that we had virtually no rally from this level. We got to 108.60. We rallied up to 108.90. Didn't do anything at all. But, we're really looking at 108.30 as a minimum here. And that's 50 pips away from where we are right now as we look at the euro. And remember, if we look at the long-term picture, the euro situation is bad, folks. And I don't know if it's going to be related to the Brexit deal or not. But when you look at the long-term weekly chart of the euro, and I've done this so many times, but hopefully we'll do it by memory, that you'll be able to see that this easily see 104 in the euro. That's a long way. And look at each of these rallies. The rallies that we've had during 2018 and 2019 were all 382. We brought that to your attention. That was a sign that this is not a bullish situation. That's why that U.S. dollar was looking so good. So those are just a few of the things that we're keeping an eye on this morning. So Just remember, we got the break coming up already. The holy moly guacamole, the show's almost over. 877-927-6648. It's too late to call in today, I think, folks, but if you want to call in tomorrow, I'm hoping we will have, and I say this with a great deal of anticipation, that we'll have Bill Meridian on the show on Friday, and he's got some great stuff, and of course, he's been pretty much spot on to these markets for quite some time, and we would like to get his ideas of, what we're looking at as we go through some of these things to take a quick look at. So those are the ones that we're watching. So just remember here, we've got to take a little break. I hear the music coming in. 877-927-6648. If you have a couple minutes at the end you'd like to chat with us, we'd be more than happy to ask the questions and answer them if we can. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to have a question number, the harmonic number for natural gas. No, I do not, Mr. Bill, but let me explain to you how to do it, and you can do it yourself, and everybody else could do it if you want to defy human nature and do it yourself. All you have to do, Bill, is to look at natural gas and pick out the most active now would be November, and if you did, let's just do it together. Shut the front door. I can do this for us. Let's just have some fun. That'll be something that we should do more often here. Let me get this up here. NG. Yeah, there we go. And let's do a 30-minute. We'll get that up here like this, and we'll move it over here. Okay. Alrighty, there's basically what you want to look at here. Let me get the chart up. Now, you're going to have to be a little creative here, Bill, but this is what you're looking at. Okay, here's a 30-minute chart going back over the last 7 or 8 days. Look for the really big swings here. Now, you can see the main swings you're looking at are about $5.90. That's what it looks like, around $5. That's what we're looking at. Right now, we've dropped, $1.60 from that. So that's what you want to do is find, and you'll have to do a lot of these. You got to get at least, well, here's one that's even better. Let's just bring this up and you'll be able to see it. Going back, and now you're looking at it over the last 3 weeks, you can start seeing some of the swings that are in there. They're usually around 5 to 10 points. So I would guess that the harmonic number is going to be somewhere around 5 points in the natural gas. And I'm just eyeballing it, but I think that's the best way to look at it. But if you'll do that and measure them yourself, you'll see a lot of them here, 9 points, 8 points, 9 points, 5 points. It's got to be somewhere around 5 points. That's got to be it. And that's just, quickly eyeballing it. So all I know is if we get below 227, it's not going to look very good. That's the bottom line as we take a look at the natural gas here trading at 230 this morning in the November contract. So that's what we're looking at today, folks. So live every day in an attitude of gratitude. And may God bless. And the one thing we want to do, folks, is to try to do something the folks that don't have a whole lot less than you do. That'll be important to do. 877-927-6648. We'll see you on the flip side tomorrow.